these three things alone give you 50% growth a year if you start factoring them in from 24, 25, 26, 28 for the next 5 years. I put it here as optimistic, but I would say it's cautious optimistic. Going back to what's the superpower of Tesla, I don't think there's one.
So this is a video I've been waiting to do for a long time. A straight, complete review of Tesla as an investment from a financial expert. If you're wondering whether or not Tesla will beat every other investment in 2023, or if you'd like to know the bombshell news the Fed just dropped, or what is the right valuation for NVIDIA stock, then stick around and you'll definitely enjoy today's video. Tom Nash is a financial guru who provides opinions on the stock market, the economy, and financial news. His YouTube channel called Tom Nash TV has close to 290,000 subscribers and has had over 38 million views. Tom left Russia to an American college and got his MBA, then worked for a major fund and 10 years in Deloitte as a senior manager. With that background, I'd love to ask him, how do we build a bulletproof investment in 2024? And of course, my favorite topic, what is the valuation for Tesla using the discounted cash flow method? Smart and opinionated, I guarantee you'll learn something new today. Welcome, Tom. Thank you for joining me.
It's my pleasure. I love your work, and I've enjoyed your conversation with Alexandra and Farzad. I think you guys have been killing it in the community.
As thank you so much. And what I like about you, of course, is you come in on a very financial level, looking at specific stocks. What threw me about your valuation for Tesla was you have said something like you think Tesla is going to destroy every other investment in 2023. And so I'm very curious why you would say that in a year when this is the AI boom. We saw the NVIDIA going up. Now that was the first half. What are you thinking is going to happen in the second half? Tell us.
I think it's a very interesting question, and it has multi-layered answers. You've kind of alluded to some of the components of that, but I'll try to break it down to the best of my ability. Look, first of all, as you mentioned, the AI boom is real. That means there's a lot of trash that's riding the hype. There's a few companies I'm not going to name here, obviously, but there's obviously, like in the dot-com bubble, we got some of the best tech companies that came out of it, but there's a lot of pets.com, et cetera, et cetera. Obviously, I think Tesla belongs to the group of the legitimate companies and the ones that will, revolutionize the world completely. That's the new industrial revolution happening right now. And the thing is, look, out of the whole AI sector, surprisingly, Tesla, which is probably a top 2-3 AI tier company. Like if you kind of think about, okay, what are the top 3 AI plays in the market right now? In my view, without any specific particular order, it's Tesla, Palantir, and NVIDIA. And you might rearrange this in any certain particular way you like. I honestly think, if anything, Palantir and Tesla are a little bit above, and NVIDIA comes in second because they're more in the service tier of things. But in that sense, okay, we're talking about a top 3 AI play, and it didn't run up as fast as NVIDIA. It didn't run up as fast as some of the other high plays. In fact, I would argue that Tesla, despite being arguably the best AI play in the market, maybe comparable with Palantir, they're still relatively cheap. If you look at the valuations of Tesla, and if you do a comparable valuation to NVIDIA, you're going to be blown away. NVIDIA is trading at 200 and something PE, 230 PE. Tesla is trading at 80. Like that means that the market is currently pricing NVIDIA as 3 times better than NVIDIA is 3 times better than Tesla. Look at price to sales; it's a very similar story. So I think in NVIDIA, if it's the benchmark of what the market prices as the leader in AI, is where Tesla should be as far as pricing. And I think it has a long ways to go because the market hasn't really figured out, wait, it's not NVIDIA who's number one, it's actually Tesla and maybe Palantir, but we're here to talk about Tesla today, right? So I think there's a huge gap. Look, at the end of the day, Herbert, they teach us something in business school that's like the basis of any financial modeling, which is the market is perfect. And in that sense,
Right.
The market always prices all information perfectly. Everybody has full access to all the information and everything is priced in at any given time. If that assumption would have been true, we would not have the stock market. Nobody would ever make money. So I would adjust that assumption to something a little bit different. I would say that the market overall, as an aggregate on average, is pretty good at pricing things, but the market misses individual companies a lot. And there's plenty of examples where the market is lagging on identifying market leaders. It did that with Tesla for years. For years, it was criminally undervalued, and it still is, surprisingly, just because it ran up an obscene amount of percentage point. In fact, I just posted a few weeks ago. If you would have listened to Jim Cramer when he said not to buy the IPO, you would have missed on 22,000% of gain, right? But despite that, it is still incredibly criminally undervalued. I think it has an equivalent potential to Palantir, which I think is a 10x potential. And people hate on me when I say that. But I think if you take a look at Tesla right now, it's not a cheap company, but it's priced so low compared to Nvidia, and I think it's a better play than Nvidia as far as the upside. So I think there's no way that for the second half of this year, Tesla doesn't make up that difference, and actually that difference gets priced in. Because there's one thing that Tesla taught the investing world. Until Tesla came into this world, Herbert, the assumption was that 80% of the money in the market is institutional money, 20% is retail money. And retail money is stupid. Retail money has no idea. They don't have the research. They don't have, they're flaky. They're traders. They're easily scared, et cetera, et cetera, et cetera, et cetera. And people were saying, well, Tesla only has like 30% institutional and it's 70% retail. So it's eventually going to fall over, kill over. And every time it dips, retail buys the dip. It dips, retail buys the dip. It dips to 100, retail buys the dip. The retail in Tesla proved for the first time in history that it does better research, it does better analytics, and it is 100% more stable than institutional when it comes to a stock like Tesla. People like to say, well, Tesla is a cult stock. It is, but for a reason. There's definitely this. It's called brands, right? Cult brand like Apple for a reason, right? Tesla has managed to create something that's very similar to what Apple has done in its sphere, which is to create an ecosystem which allows Tesla to sell value. Every other single auto manufacturer in this world, on this God-given earth, is selling price. There's not, except for luxury brands, who I think are irrelevant. Lucid. Everybody sells price. You're trying, a Chevy versus a Ford versus a whatever, right? Tesla's came out and did what Apple has done with the iPhone. Apple causes you to spend $1,500 every year on essentially a phone with ease because of the ecosystem, because of the software, because of the UX, because of the UI, because of what it does for your life, etc., etc. Tesla has done that with vehicles. It's the first auto manufacturer that pushes value. The Model Y is the best-selling car in the world right now. It just bypassed the Corolla, which is significantly cheaper and has not been beaten in decades. And that's with an expensive car. Imagine what it does when it releases the next gen platform, whatever that's going to be called. So I think with all that in mind, I haven't even said a word about energy. I haven't even said a word about robotics. I haven't said a word about AI. I haven't said a word about insurance. And we can do this all day about all this other stuff they're developing. And they're really good at multitasking, by the way. So, at this point, at this juncture, at 80 PE, I'll take it.
So I guess the question is at 2023, right? Tesla's been traditionally seen as a car company, and that seems to be holding strong. Maybe there's been a new narrative beginning the first half of this year. But what would the catalyst need to be to finally people say that Tesla's an AI company, Tesla's an energy company in the second half of the year? Because you did say 2023, so I'm just going to hold you off on that a little bit. What would need to happen for that to happen? Of course, I'm a big believer. I know that Tesla's going to go to 300 and then beyond by the end of this year because of the catalyst of the CyberTruck. And I do believe that people will start seeing Tesla as an AI company. The question is, does there have to be catalyst to change the narrative? I do notice that CNBC and the institutional analysts are asking questions about energy and AI now, and so I do realize that it is changing. What do you think might happen in the next 6 months for truly the stock to continue its growth up in order to be one of the better investments for the year?
So for Tesla to be excellent in 2023, it doesn't have to 10x in 2023. Let's be clear. It has to do well. And for the stock to do well in 2023, and I spoke about it when I spoke with Gary Black, I had him on my channel, and I spoke about it. Gary and I see things very similarly. So we value Tesla, despite everything we just said, based on what they got right now in market, right? So if the way I look at Tesla and the way I analyze it, I look at it and I analyze based on things they've already released. My valuation has nothing in it, which is a future product, which I don't know how to price yet. So looking at it, Tesla, let's look at Tesla as a car company, right? even as a limited view car company for the rest of this year, for the next 6 months, because I think for the next 6 months, this is where the money is going to come from. There's no other way to look at it. So for the next 6 months, let's look at it as a car company, right? So this is a car company that's operating in high interest environments, a little bit quasi recessionary demand curve, and a very very strange market right now. It's up, it's down. So the economy is kind of trying to test where it's at. Interest rates are high. Demand for vehicles isn't as good as it used to be, like back in the day, et cetera, et cetera. So in that environment, first of all, Tesla does not like if show me a car company, especially in North America, that has no debt and has massive amounts of cash. So they don't need. There's no, I mean, as far as leveraging is not an issue for Tesla. So they're not going to be sensitive to interest rates. While Ford and GM are carrying massive ball and chains, and like we're talking about massive debt. So if you eliminate that, the performance, but just on that point alone of their financials is going to be insanely good because they will not feel the pain of high interest. And if you mentioned earlier one of my videos, the Fed, they did say that they're not reducing rates for the rest of the year. So we're at 5.5% for this 6 months. Tesla doesn't feel it. They don't care. They don't care because they have literally, like, and not literally, but quasi zero debt. That's number one. Number two, Tesla is currently on the cars they're selling today, not talking about a year now, 2 years, based on what they got out today. That's the crazy part. They have the best operating margins in the business, the best EBITDA margin in the business. So we're talking about a company that generates under 2 million vehicles a year. I'm not even talking about Ford and GM. I'm talking about Toyota. Let's compare them to Toyota and VW. Tesla is beating Toyota and VW with margins as it stands. So Toyota, they make 10 million cars a year. Tesla makes under 2, so 5 times less vehicles, better margins at this point. They've not even fully scaled yet. They don't have, the margin making cars yet. CyberTruck is going to be a massive margin car. The next gen cheaper car is going to be a massive margin generating car. FSD, when it releases we're talking about a SaaS product, the 80% gross margin. That's going to be so. Even then, on automotive margins as they stand on the Model Y and the Model 3, X and S, I don't care about. They don't really make money for the company. But the Y and the 3 are so much better in margins as it stands right now. And Tesla is just ramping up more. It doesn't seem like it has a demand problem like certain morons were claiming a year ago. So it's not hitting a demand wall. They're selling everything they can. The only constraint for Tesla is how many cars they can push out, right? So they're selling more and more cars. Demand is going up. Prices are coming down. So they're eroding margins for massive amounts of demand. So margins are the best in the business. No sensitivity to interest rates. So if I look at their second half of the year as an automotive company, I mean, they're going to kill it in the market. They're going to generate massive amounts of cash flow at great margins. They're going to increase their cash positions. They're ramping up. They're building new factories, et cetera, all while investing massive amounts in R&D, in CapEx, building new factories, basically increasing the lead they already have, which is a country mile. And, I find it amusing, like people talk about BYD. Sure, BYD sells a lot of cars in China. Half of it is hybrids. That's a whole different point that people kind of miss out. But even, there's a video that's circulating on Twitter. I mean, it's a very broad definition of what an electric vehicle is. I mean, it's not in the same category. Sorry. With all due respect to BYD, I think they can be good, but in any case, just as an automotive company for the rest of the year, they're going to kill it. They're going to have another 2 great quarters, which is going to push the stock up as far as a catalyst. And at this point, they don't have to go to $3,000 in 6 months. I'm not interested in that. So as long as they keep pushing and they keep getting better every single quarter, for me, that's enough. And I think none of the other auto manufacturers in the world, definitely not in America, are going to catch up anytime soon.
Hey there, thank you for joining me. If you can, please consider supporting this channel so I can keep it going. It's a lot of work arranging all these amazing interviews. One of the easiest ways is just to click that join button and become a member of the channel. Thank you very much. Let's get brighter. Now, what I love talking about with you is that actually you sound like you're a bull and you are a Tesla bull, but you're actually not an Uber bull because
No, they hate me for this. Like the hardcore people, they hate me.
Right. Which is funny because you're actually reserved because you just told me that your 5-year target for Tesla is 1,400, and that's assume we're at 300 right now. That's like a 5x.
It's a 430% upside for 5 years,
which is hilarious, which is great. But it's funny that like many of us
You know,
think
on
you're
that
being a little bit
list, you've seen that
conservative.
list on Twitter of the
Yeah,
price
yeah.
targets.
Yeah,
I'm
I'm in
one of the
there.
less
Yeah,
ones. Yeah, I'm
yeah.
one
You're
of the less ones, bro.
one of the
Yeah,
lower ones, which is
yeah, yeah.
funny, which is great because you're very careful. You're very conservative, and so I just want to set the stage because people might think that you're very bullish, and yet you do say bullish things, like you're saying right now. You even in that lens, you still see Tesla being a great investment this year and next year, and of course ongoing. But show me your discounted cash flow approach because I do want to see how you broke it down. This is a spreadsheet that you've established, and I want to see how you're thinking about things. So I'm going to share this screen that you've shared with me, and you walk me through this whole thing.
Yeah, so this is coming from Stock MVP. This is my own platform, which I helped to create. This is kind of a
Yep.
summary of the assumptions I use for my DCF model. So it's easier to look at the screen rather than an Excel spreadsheet. So
Okay.
basically, just to talk about your point here, and I think it is important, I am a bull. In fact, it's kind of funny because I'm what you would call a moderate, pragmatic bull. I'm being hated by both sides. The people who are like absolutely, there's a lot of hate towards Tesla. It's like, oh, you're a fluffer. You're like, la 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 and all that stuff. And the
Right.
people on the other side, like I love Warren, but Warren like has like he
Right.
says, oh, your target prices are ridiculously low. You don't understand. Etc. And I love these discussions with him, right? But it's kind of funny. But to me, the idea of investing is very simple, Herbert.
Okay.
I look at what's probable than what's possible. So for me, I look at what the company shows me today, and I look at the absolute worst case, and I say,
Mm.
okay, what am I going to make worst case of this, right? And then from that point on, whatever I make above that worst
Right.
case scenario, it's a bonus. I don't
Mm.
want to be surprised and caught blindsided. So for me, I'm not going to represent to myself, oh, obviously I think Tesla can hit way higher than this, but
Mm.
I'm not going to show that and represent that as my position because I'd like to be wrong on the downside than wrong on the upside.
Okay.
So
Yeah. Yeah.
to
Fair.
this date, with all the criticisms towards Elon, right? He's late on his time, sure, but there's a good reason he's late on this on the things he on his timelines. And I had it happen to me before. What do you rather be late on your timeline or push out something that's half baked and isn't ready? So you can take a page out of Boeing's book. What happens when you push out a pre-ready plane,
Yeah.
like a 787, right? That's all story. Like, so he's not gonna push out something that's not 100% perfect. And until it's 100% perfect, it's not coming out. And you all can you can drink a glass of water and just relax. So it's later than we promised. Whatever, right? The FSD. Oh, you promised. Well, sure, whoop-de-doo. I mean, it's gonna be out when it's 100% ready. He doesn't push out half-baked stuff, and I respect him for that. And with all the respect to Dan O'Dowd and his crowd of haters, I mean, it's already pretty good, but I mean, it's still in beta. So the idea is for me is it's kind of this Eastern European approach. I
Mhm.
look at the worst possible outcome. That's the Russian side of me. Like
Right.
I'm gonna look at it as like
Gotcha.
the most bear case possible,
Yeah.
and then I'm gonna be surprised to the upside. So as far as my model, like
And
that's the
you're a
summary of the
quant.
model.
You're a quant too. You want to
I
calculate things, and you want to.
I want to, yeah, I want to see the numbers exactly. I
Yep.
want to see the numbers. I don't want to assume like there's no way. Like, I don't know what the margins are going to be. Fine, like what's the final margins of the FSD is going to be like? What's the penetration is going to be like? I don't know what's the Tesla bot's going to be like. I don't understand fully still yet the insurance business how it's going to look like.
Well, the
Um,
MBA term for it is nutty.
yeah,
The margins will be nutty.
I think like FSD is going to be 80% gross margin, which nobody has in the auto industry. No, that alone excludes Tesla's from auto manufacturer definition. Like nobody has 80%. Tesla is a SaaS business
Mhm.
with energy robotics, AI, and yes, it one of the applications of their technology is vehicles. Sure, that's the first one they pushed out to generate cash flow. But I mean, I've said it earlier today. It's Tesla Energy is so misunderstood. But let's talk about it later. Let's talk about the model first.
Okay.
So this
That's
model
good.
has nothing of these things. The only thing it has, this model, the only thing it has from the energy side is just the mega pack because it's
Mhm.
selling, so it's generating cash flow. It doesn't have the Cybertruck yet. It doesn't have the Model 2, whatever you want to call it, the $25,000 car. It has what we have in the market right now, a very careful assumption of FSD, beginning of FSD penetration, et cetera, et cetera. So basically a very careful model. As you can see here, it's a 5-year target. We have the conservative, the middle ground, and the optimistic side of things. Bear case for me here, the conservative side, the 5-year. This is essentially if everything goes to hell, where Tesla is going to be in 5 years. If every single assumption I have about this company goes foo-foo, and this becomes a goofy stock, and something like Elon Musk leaving the company, something insane happens. So the absolute bear case for this company is going to be 446. So in my opinion, right, when I look at this, I say I like that floor, because at that floor, at the worst, I'm pretty much on par with the S&P 500, right? So if I just put my money in
Nice.
an index fund, I'm going to make 50%, right?
Nice.
So my floor is pretty much the index. So
I love
I'm feeling
this.
comfortable with that. Yeah.
Love this.
So
Love this so
yeah,
much. Yeah.
yeah, the middle ground I think is where you have a little bit more bullish assumptions, but if you look at the optimistic side of things, it's not that optimistic, because the only thing I've assumed in my optimistic model is 50% growth, which they got today, and they've reiterated multiple times on the guidance. They performed, they delivered 50% growth, and as they come out with the Cybertruck and they come out with the Model 2, etc., and the FSD, things that are already lined up, that 50% is going to hold up on the revenue growth. That's the most difficult part of this model, is the growth. I think 50% they'll do easily with all this new stuff. We're talking about revenue growth, right?
That's the
Net income
difference between
profit.
you and Gary Black, right? Because Gary does not assume that it's going to be 50% growth.
Yeah, but look, I'm not Gary Black, and Gary Black isn't me, and I love Gary Black. But my assumption is something that's based on my own world. In my world, right? When I'm looking at a new SaaS product, look, let's pause this for a second. What is the best category to be in the United States as an auto manufacturer? It's pickup trucks. It's the best category, best margins. You make the most amount of money. It's an absolutely beast of a category. So Tesla is generating right now 50% growth on an annual basis without a truck. Now the truck is there. It's out in the year. So okay, what's the best margins on a 4-door sedan, right? That $25,000 to $30,000 car. They don't have it yet. So as it stands right now, Tesla is doing a 50% growth without a truck, without a 4-door sedan proper. Like the Model 3 is more of a premium sedan, right? So imagine, and then you add a SaaS product, which is the FSD. Just these three things alone give you 50% growth a year if you start factoring them in from 24, 25, 26, 28 for the next 5 years. So again, I definitely see a 50% growth as something I put it here as optimistic, but I would say it's cautious optimistic. If you go down and you look through the model, net income margin is 8 to 12%. It's reasonable. We can go to PE. PE is pretty much what it's at today. Conservative, it's 80. It's trading at 80 right now. 100, it's not out of the realm of possibility for a company that's going to dominate like crazy. Discount rates right here, as you can see, are 14 and 12. So the reason you see that difference in the discount rates, and I'm going to explain that in a second. So based on my weighted average cost of capital for Tesla right now, it should be discounted at 14%. Okay, so just to explain to people who are not from finance, and I'm sure you know this, right? But the idea here is the higher the discount percentage is, the less the valuation becomes, right? The more discount you have, the less future money is worth today, right? So if you look at Tesla today and you do a weighted average cost of capital calculation, right? You look at their the structure of the cost of equity, you get 14%. But that's based on the 3.9% risk-free rate, which is going to come down as rates will come down over the next 5 years. That's a fact. So you have to adjust for that. So even my conservative approach is uber conservative. Like it assumes 14% discount for every single year for the next 5 years. It's not going to happen. If anything, this should have been 12 and 10. Like if I was honestly like super honest with myself, I would put 12 and 10. But I like to be like super, super hard on my companies that I evaluate. So with 12% optimistic, I would call it, it's going to be very hard to say that it's not going to be, you shouldn't be discounting at 10%. And look, as company becomes, as Tesla becomes better, the cost of capital becomes cheaper because more people are willing to give it more money, et cetera, et cetera, et cetera. So there's a place to assume a lower discount rate. But hey, the 5-year optimistic, that's 1420. And by the way, that's an accident. Somebody noticed in my community, it's 1420. And I was like, I didn't even notice when I was doing my model. It's an accident. So it says 1420. That's an accidental number. I don't know.
Sure.
I don't know what it says. And also on the opposite, it says 430. It was almost 420. I think it's going to be very hard for Tesla to go under that within the next 5 years. I said this earlier today. I'm going to repeat it today. Somebody asked me, hey, Tom, is it smart to invest in Tesla right now after their crazy run and all that stuff? I said, look, it all depends on your horizon, right? do you have a 10-year horizon on the stock? If you've got a 10-year horizon on Tesla, the chances of you not making money over the course of the next 10 years are zero. If you have the patience to put the money and wait for 10 years, you know, there's no, there's like, it's death, taxes, and Tesla. There's three certainties in life. So for the next 10 years, there's only three things certain. That's, there's not, if the only question is, do you have the patience and are you going to need the money? Because sometimes people put in money in the stock and shit happens, health, God forbid, or, trouble, financial issues, right? But if you can afford to stay in it for 10 years and not need the money, then 10 years it's your insurance policy. I mean, in 10 years Tesla is definitely not going to be trading at $300 per share unless there's going to be a split.
I love this. So this is fantastic. You really are being very, very conservative. Even your
Yep.
conservative is very it's already like, it's actually really, really conservative.
Yep.
Your realistic model right in the middle, and then you're really trying to tamp down on your optimism on the optimistic model. And that's why I like this a lot. This kind of gives me the sense that this is kind of the floor, and that yet you're very bullish when you say something like, this is a certainty that these things will happen. And then I think the way you're able to say that is because when you really look at it from the negative perspective of everything can go wrong, it still does pretty well. It still does well. So I really like that
Yep.
you did that. That's fantastic. And you,
Even if Elon leaves tomorrow, Herbert,
right? Yep.
and it just stays a car company, it doesn't move past this point, it still becomes the
No.
best car company in the world as it stands.
Yeah. And I agree. At this point, it's the train has left the station, as you can say, because Tom Jew and you got like the 5 gigafactories already moving
Yeah.
along. It's not like you need Elon necessarily to create gigafactories. He's already shook hands with all of the major uh, governments. I think that that's the thing that no one else could have copied at this point. If he had left last year,
Yep.
I don't know if these deals with these massive countries in the world, like the world leaders, would have happened. It's really him. So he is important. But like you said, if that doesn't happen anymore, cars production and all that's happening. Tell me about Tesla in 2024, and then you maybe include that because I know you don't just look at Tesla, but you have this video about the bulletproof investment in 2024. So if people were thinking about what should they do for 2024, looking at the broader market, I assume
Mm-hmm.
what was your recommendation?
Well, it's not specifically a recommendation of specific companies. The video was a tool for investors to use. So I'm trying to promote people to think in the format of a process rather than a specific stock. So the idea here, that video was basically, what's the process to build something that's going to last you for years. Now, the 2024 is basically SEO, search engine optimization. So we come up on search as creators because we want to get exposure, right? But the idea is like, how do you build a bulletproof portfolio, something that lasts for years?
Okay.
And doesn't, you don't want to be flaky. You want to be very formed. So, and the lesson I want to teach people is like, look at what happened, right? Tom Nash, 2021, pushing Palantir. Tom's a genius. Everybody loves Tom. 2022 comes in, Palantir drops from 35 to 6. Tom Nash, you're an idiot. We hate you. People unsubscribing, like videos, angry videos. 2023 comes in, it jumps from 6 to 20. Tom, you're a genius again. I mean, come on, give me a break, bro. Come on. Now, during that time, I haven't sold I didn't sell anything. I stayed the course. It didn't really bother me. There were other people who were in the community who sold. I don't care about that. But the idea here is very simple. Why didn't I manage to stay in despite this craziness? Because I had a process. The process is something very, very simple. Like, and I teach in that video. Is look, it starts with bottom to top. So you look at your life and you say, okay, if I'm running my life, I should run it like a company, right? Every company, especially public company, they have to have a budget, right? They have to have an audit of the budget to see that they conform with the budget, and they have to make a new budget every quarter, make sure that they stand with it, et cetera, et cetera, et cetera, et cetera. Okay, as an individual or household, whatever it is for you, right? You'd be shocked how many people do not manage a household budget. It's just shocking to me how many they don't. And I was like, dude, before you even talk to me about the stock market, let's see your budget, okay? Let's see how much cash flow you generate, right? How much revenues you got? What's your fixed costs, right? what's what your variable costs, etc., etc. Let's build a budget and let's see what your free cash flow is as a household, right? Cool. So we figure out what your free cash flow is as an individual or household. Nice. From that free cash flow, we start taking apart. Okay, how much money you're going to spend on having fun or buying, stuff that make you happy, whatever, traveling, whatever, right? And how much is going to go towards your future, right? Your future being basically savings and stock market, right? So let's say that $1,000 a month you are comfortable allocating to the stock market. Notice that this 1,000 didn't come out from your savings. It didn't come out from your food, from your rent. It's basically money you can spend on buying PlayStation video games or whatever, traveling, right? So that 1,000 is what you put in the market every single month. Cool. From that 1,000, let's pick the companies you want to invest in, not based on price, not based on hype, not based on FOMO, not based on anything. Let's pick good businesses you want to own. If you were to buy Tesla as a company, as Warren Buffett, right, for example, like, right, would you have bought Tesla as a whole company? Would you have bought Palantir as a whole company, right? Let's find businesses that make sense to own because they'll dominate in the next 10 years. And even if it's overhyped, it's the price is too expensive. It doesn't matter the price. Let's just look at good businesses, right? And in any case, so okay, let's say we pick 5 companies, and each company gets an allocation of $200 per month, right? So every month, those 5 companies you've picked get $200 automatically deposited, and that basically creates a process. Now, from that point on, you basically say, well, okay, I'm depositing instead of 200 every month, I'm depositing 160. Why? Because I'm saving $40 on the side. Why? Because you run a weighted average with every stock you invest in. So let's say you want to invest in Nvidia, right? I don't know why would you in this price, but again, it's a good company by my system. You say I ignore the price. It's a great business. They'll dominate. They'll be relevant. Sure. Let's say you want to buy Nvidia, right? But Nvidia is super super expensive. It's trading at ridiculous multiples. So how do I reduce my weighted average my average cost in the stock? Same with Tesla. Same with Palantir, right? Well, you start buying without trying to time the market, right? The share price goes up, goes down, goes up, goes down. Nothing goes up parabolically, right? So you can try to time it, which I think is statistically impossible. That's gambling. Or you can just try to buy it along the line as it goes up and down, up and down. If you just buy it along the line as it goes up and down, you'll have the average price during the whole time, which is much lower than the top, but much higher than the bottom. But if you say, I'm going to be buying at an accelerated pace when the stock price is down and at a reduced price when the stock price is up, then my weighted average at the end of the process within 10 years is going to be much closer to the bottom, whatever that's going to be, right? So I'm essentially kind of timing the market without timing the market. So the way to do it is like you say, I'm spending $160 every single month on investing in Tesla shares, right? And I'm putting 40 to the side, and I'm creating a bank. And that bank exists on the side as cash that I'm going to use. When I'm going to use it? When a stock within the 5 stocks I have drops below a threshold, I determine that threshold, and everybody has their own threshold. But for me, for example, it's a 10% below the 52-week high. So let's say right now with Palantir, it just broke through a new 52-week high today. It got into $20 per share, right? So in that case, my new threshold is $18. Every time Palantir is above $18, like it's right now, I'm spending $160 a month. I'm not doing anything different. But the minute Palantir hopefully drops because of bad earnings or something happens that dips the stock below $18 next week, hopefully, then I'm going to be doubling down. I'm going to be taking from my bank that 40 I put in every month and accumulated. I'm going to use that to double down and buy 320. Because I'm in double down territory. So in double down territory, I'm not buying 160, I'm buying 320, and the cash is coming from all this dry powder put on the side. And that way, I'm accumulating 5 companies that are going to be solid, and I'm making sure my cost basis in each of these companies is going to be closer to the bottom. As the longer I stay, the closer it's going to be to the bottom. And no emotions, no anxiety, no panic, no FOMO. I don't get scared when it goes down. I don't get excited when it goes up. It's automatic, absolutely mathematical formula, because we are our worst enemy. There was this famous study by Fidelity. They've tested like all the portfolios, and they've found out that the best performing portfolios were by dead people. People who forgot their passwords. I'm not even kidding. It's ridiculously crazy, right? Look at the biggest Tesla bulls that have made money. Dave Lee, right? Or Stephen Mark Ryan or Farzad. They haven't sold a single share. I know a guy like that. One of my relatives is an IPO Tesla investor. He hasn't sold a share in his life ever. And he's not even thinking about it. He needed to buy a house, and some money that he needed fell through, he wasn't even thinking about selling Tesla shares. He took out a loan. So
Mhm.
longevity in that, that mindset is like, as an investor, as a long-term investor, you want to eliminate emotions, because emotions are gonna where you're gonna screw up. And if you do that system, you create a portfolio that's strong. The cost basis is going to be by definition lower than the average, and you're going to create something that can serve you when you retire, instead of chasing that quick gains and the profits and the swing trade and the options and all that stuff. So that's how I like to
I
play
love
my
it. Yeah.
game. I don't like to play the short game.
I like this so much. So it's a modified dollar cost averaging approach that then maximizes or increases the probability that you'll buy lower than the average, closer to the low.
Yeah.
I like this. It's the first time I've heard of that. I think that's valuable information for many of our viewers. I really appreciate that, Tom. That was fantastic. I haven't even. I don't. I've not heard that before, and I think I might
Hmm.
apply. I like the idea, which is you're going to buy high because like you said, it's a good company. It's going to go higher than that. I've always bought Tesla at its height, at its all time high. If you really think about it, every time I've been
Yep.
buying for 10 years, well, the price where it is today, I bought at that time, it was the all time high at that time, but it's no longer the all time high today because it's a good company. You know, its growth, it's already
Hmm.
an exponential curve. But at the end of the
Yep.
day, stocks go up and down. It's very volatile, as we saw last year, 300 to 100. And so but that's what you do. So I love that very much. Now let's talk about
People
NVIDIA.
made fun of me pre-split. I said, "Oh, it's a less chance to get it at 800 pre-split," and people were like, "Oh, Tom, you're a moron." Like when it dropped to 100, and like it's the same thing. Like people are very short-sighted. I don't mind honestly, but like,
Sorry, stop. You actually thought and knew that it might fall to post split 100. Is that what you
no,
said?
I didn't know it's gonna fall. I
Okay.
I tweeted before the split that 800 is the bottom for the stock.
Okay. So if 800 divided by 3 at this point would be 200, 300, 200 something, right? Yeah.
Yeah, and then it dropped to 100, and people are like, "Oh,
Correct.
Tom, you said you're an idiot." I said, "No, my guy, you're missing the point. This is your opportunity to go from being a cynic who's sitting on the sideline complaining to actually, this is God giving you a second chance, and you're missing it by taking shots at me. Just buy the stock." I can't. You know what I mean? It's like, and like, dude, this is like God giving you another chance when they drop to
Yeah, I
100,
love it.
and and then they change the tune, and then they say, well, oh, it's finally collapsing. I'll get it at 70. Well, good luck with
Right.
that.
Is that funny? Yeah, people were saying that too. It's 100. Oh, wait till it's 70. No, I mean, yeah, you put yourself out there as I do too, and you will get pot shots because it's just, hey, it's a conversation you're
Yeah,
creating, and no matter what you say, it's going to be the wrong thing because it's either too bullish or too conservative or whatever it is. Like people will
bro.
say, yeah,
I'm Russian. For me, when people say mean things about me on the internet, that's the least of my concerns in life.
that is funny. I guess so, but no, I mean, yeah, yeah. It's no, you're an interesting individual because you're because when you say I'm Russian, there's that mentality of being conservative, being very careful about your assets, but at the same time you can be very bullish too in your statements. So tell me about Nvidia and the AI boom, right? Because this is important. This is a narrative of the that you said it earlier at the beginning of the show. You said that AI boom is real. I've been saying the same
Yep,
thing. This isn't.
yep.
This is even bigger than the internet boom
Oh
dot
yeah,
coms and all that. Internet boom was real, absolutely, but there's so many companies that weren't real jumped on the bandwagon. And the question today is, is this AI boom? There are definitely companies jumping on the bandwagon. You got to be super careful, but AI boom is real and it's bigger than the internet. This is going to be the biggest
yep.
thing so far that's ever going to increase the productivity and the valuation of these companies. And I just reported this morning that 44% of all the S&P 500 companies have reported on this by this date, July, and 80% of them, of those who reported, positive earnings. And so, and I don't even know if that includes AI boom. So tell me about NVIDIA. You had a video where you said, here's the right valuation for NVIDIA. So two parts question, right? One is what's the right valuation of NVIDIA? Because we all know that how big of a jump it made in the last several months. And then back to the beginning of the conversation, how does this apply to Tesla? Tesla showed that they have their Dojo supercomputer that's going to
Mm-hmm.
be equivalent to the NVIDIA their Tesla supercomputer. I'm not trying to compare Tesla to NVIDIA. I'm just saying that you know Tesla themselves is an AI company, but they're not being
I think they're a
recognized
better
for it.
AI company.
Okay, so tell me about that.
Well, AI, right? I'm not an AI expert. Let's be honest. Okay, I'm not here on the wearing my head as an AI expert. There's definitely better experts than me. In fact, almost anybody's a better expert than me. There's one thing
Sure.
I know about AI is what creates AI is quantity of data, right? Whoever has the most data
Right.
is most likely going to win, right? Who has more, sorry, freaking data than Tesla? I'm sorry, I was about to do it again. So who has more data than Tesla? I mean, let's be honest. I mean, Nvidia is a great company, and Jensen is definitely a top five CEO. He's proven that every single person I know who works for Nvidia loves that
Mhm.
company. People don't want to leave. They max out their ESOP plans. They're buying like crazy. They're raving about the company. I know multiple people who work for Nvidia. Like it's the culture is incredible. The company is in forefront of every major technological development, et cetera, et cetera, et cetera. I think Tesla just has more data. They have more data, and even though Nvidia has some really smart people, Tesla has better HR because the best engineers in the business they want to work for Tesla. They want to work for Elon. So better people, more data, and more resources invested in AI development. So where's Nvidia? It's like they can coexist and they're not mutually exclusive. But I think people have a hard time. Why do I think Tesla isn't priced like Nvidia? Look, Nvidia is priced at 240 price to earnings,
Mhm.
45 price to sales. I mean, it's incredible valuations. And if you look at Tesla, they're priced at a completely different level because people have a hard time identifying Tesla as an AI play because they build cars. Then
Mhm.
it's really hard for the retail investor and more so for the institutional investor to accept the fact that this company is indeed an AI play because they've never seen a car company that's also like an AI play. That's why you can get Tesla at 69 price to earnings and 9 price to sales. So it's a misunderstanding. It has to do with historically institutional investors misunderstanding Tesla. It started with stuff that are kind of normal. Like Gary and I spoke about it. Institutional investors, they want to see share buybacks, which is a waste of money. If you're Elon, like why? I'll use that capital better, right? They want to see a succession plan, which none of us want to see as Tesla bulls. We want to see Elon there. I mean, that it will accept the key man risk. So institutional investors, they have a hard time with key man risk. They have a hard time with lack of share buybacks, et cetera, et cetera. And they don't like that, 60, 70% retail. I mean, they think retail is stupid. So we've proven to them that they're stupid and they've lost a lot of money and a lot of opportunities. And we've made a lot of money in Tesla, but still, they have this superiority complex where they feel like, they're looking down on retail. Whatever. I don't mind. To me, it's a misunderstanding. It's a mispricing. And at the end of the day, look, you can pay 240 PE on Nvidia and get, I think, a top three AI company, or you can pay one third of that and get the best AI company, or probably one of the. I think it's between Tesla and Palantir, but they're competing on different categories completely. They're absolutely parallel at one third of the price. So which one would you buy? I think to me it's clear. I mean, I tested ADP just ridiculously low, and look at the end of the day, if I look, you and I have been around, right? I'm 42 years old. I've seen what cars used to look like, right? And you've seen what cars used to look like. If I would have told you when you was 25 years old, or you would have told me when I was 25 years old, we're gonna have autopilot. Forget FSD, just autopilot. That seemed like science fiction, right? I
Mhm.
know we grew up on like Back to the Future and flying cars and all that baloney, right? But I mean, like
Mhm.
cars have not evolved, since the 50s until Elon came out. The cars that we drove before Tesla and the cars we drove in the 50s are pretty much the same thing with
Mhm.
minor cosmetic adjustments and some, electronic adjustments. Elon came in and absolutely revolutionized not just, the fact of the way the powertrain works, is the software, the UX, UI, what a car is, the ecosystem of a car company, the monetization possibilities, et cetera, et cetera, et cetera. So much has changed, in the business. So I again, it's the same people who say, well, Ford is valued at 4 PE and this. Okay, so they're not going to be convinced, and that's okay. But at the end of the day, I think institutional investors are starting to come around with Tesla because every time Elon executes and he delivers an outstanding quarter like they did last time, they're starting to realize this is for real. And I think for me, it's kind of the longer it takes them to understand that, the better. Because I'd love to pick up more Tesla, and the longer this takes
No,
them, I have no
you're
issues
fine
with
with
that at
it.
all.
Okay.
Yeah,
Yeah,
no
there's
problem.
there's definitely people that invested in 2022, and I feel for them as well. But tell me about. I know you only have just a few 4 minutes here, so it's a big question. Maybe you can answer it very quickly. But what do you think is Tesla's superpower? What is it that makes them so successful? What, from your perspective, which is a conservative who's bullish?
Look, you guys think I'm a conservative. I mean, definitely compared to Farzad, I'm a conservative, and I think he's done a terrific job at educating people about
Mhm.
Tesla uh, in such an objective and level-headed way.
Yeah.
I think he has built a terrific community. So going back to what's the superpower of Tesla, I don't think there's one.
Mhm.
So if I had to choose what makes Tesla tick, if we take Tesla, we break it apart to pieces and what's inside, I think it's the dude, bro. Without him, none of this happens. Like, look, we had smart people before, we had capital before, we had machinery before. All of this existed. Sometimes we need that dude to come in and say, "Hey, we want to do the impossible." And at the end of the day, look, no disrespect to Ford, right?
Mhm.
And I like Jim Farley. I think Jim Farley is a
Yeah, it's
fine
great.
CEO. But before him, the guy who was in charge.
I don't remember.
So he, so before, I don't want to name any names, but the previous CEO of Ford, his previous job before that, he was in a furniture company. He was the CEO of a
Mm.
furniture company. So that's a huge difference. I'm not, no disrespect to anybody. I'm saying that when you have a CEO who's a founder and he is pretty much a one-man show, he dominates the board, he dominates the decision making, he dominates everything. He gets to call the shots, and he is a terrific mind. He has engineering understanding. He has the vision, etc., etc. He's not there to push numbers. Like, he's actually a visionary. Like, it's almost like when you think about what made Apple so incredible,
Yep.
right?
Yep.
Steve Jobs came in and it was such a
Mhm.
visionary. But I think Elon Musk is a Steve Jobs 2.0, because it's not just that visionary. He also he has that engineering background that Steve Jobs never had. He was just an innovator and such an incredible mind. But Elon Musk comes in and he understands how every little thing ticks. He can explain in every single minute detail of the composition of a battery, or of every machinery. Like, he knows where every single bolt goes, etc., etc. His ability to go drill down into details and come back up into the vision right away and create a company with no real, like, Farza talks about it. It's absolutely flat structure. You can email Elon. There's no bureaucracy and all this shit. Like his ability to create this incredible structure where a company invests massive amounts of money to CapEx R&D, and then just spend so much money in innovation and still manage to be more profitable than everybody else. I mean, this is like unthinkable things. So if you ask me, what's the superpower? It's the dude, bro. It's the
Yeah,
dude.
it's a
Without
dude,
him, none of
bro.
this happens, bro. It's the dude.
It's a dude.
Like, at
But
the end, the core, like when you distill everything, it's him, bro.
yeah, yeah. No, so I do think, of course, it's him. There's no denying it. But what he's created, his number one product, is the company, and the company is meant to live forever, and it's designed
Yeah.
in a way that's continuing growing forever. So I don't want to put too much. It's absolutely him. That's a superpower. But I am one of those who don't who can see this thing succeeding at this point as he continues to make it happen. The bots are going to happen if something
Yeah.
happens to them. It's like it's already got to the point now where it's going to happen. So like, once he
Yep.
got these things going, they're moving forward, and it's almost a runaway train. Okay, well, thank
I
you so
mean,
much
dude,
for all
look,
my
if you ignore Tesla, let's leave people with this. Let's ignore Tesla, right? If I would have told you, hey, we're gonna send rockets into space, they're gonna come
yeah.
back and land on an X on the floor, and like that has nothing to do with Tesla, and he did that as well. So, like, I mean,
Yeah. I mean, no, it's obvious that
I've
no
I've
one,
come from the country that invented these rockets, the previous versions. I
right?
mean, nobody imagined this shit is gonna be able to be reused and like land on back. Like this is like
Yeah.
Back to the Future science fiction for me to see these things happen.
Yeah.
I'm
I have
I'm
no
so
doubt.
fortunate to get to see this.
Yeah, we are living in the lifetime at the same time
Insane.
as Elon Musk is, and he will turn out to be in the history of the world, if not the. It's going to be one of the top people that's changed the world significantly.
Yeah.
Um,
And people like complain he's not tan enough. Motherfucker, that's good. He works like
right,
24
right, right.
7. Like, that's
He's
exactly what you want.
that's right.
You
You
know
want
him
to make
looking
fun
like Bezos over there, like with the like
muscles.
dude works.
he spends 5 hours of his day working out, right? And Elon's not doing
Yeah.
that. That was a lot of fun, Tom. I really hope you'll agree to join me on a regular basis, or at least a few more times. Please follow Tom on YouTube. He is on Tom Nash TV. This is, you're enjoyable to listen to, smart, opinionated, willing to take the arrows. Follow Tom on Twitter at I am Tom Nash. Thank you so much, Tom. See you. See everybody.
Thank you, Herbert, for having me. It's been a blast.